Hello everyone, this is today's video analysis for February 8, 2019. Today we're going to take a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. Starting here on the daily time frame, we see that the currency pair has been rising over the past several weeks. We see these couple of black boxes here, a period of congestion here after the flash crash we had a few weeks ago. We had the market come back up, go into a period of ranging or congestion, breakout, then went up, and now we've been in a holding pattern between the yellow and the green shaded areas for a couple of weeks now. Yellow zone 109.20, 109.0 is the yellow shaded area where we've seen support over the past couple of weeks. And in the green zone up here at the top of the black box, 109.70, 109.90. So interesting area here, 107, 109.70, 109.90, the green zone. We've seen quite a bit of resistance into this area. Market's been so far having a very difficult time breaking through that and continuing higher. Currently, the market's sitting right around the green zone 1, 2, 3, 4 days, 5 days if you count the day coming up into it. 5 days in a holding pattern, smaller pattern here into the green zone. Hasn't really broken lower, hasn't really broken higher, just been kind of holding out inside that green zone. I do have a Fibonacci measurement here on the chart, and it's a kind of a weird way of looking at Fibonacci. I have it drawn from the highest high, way up here at the top of the chart, taking it from right there where the black X is, top left hand side of the chart, down, and it looks like it's right here in the middle of the wick of the flash crash that we saw several weeks ago. It looks like it's right there in the middle. What's important is, and I take it down to the 4-hour time frame, is it's actually connected to some lows that are there in the middle of that. I didn't take it all the way to the bottom. I took it somewhere right here, kind of an average of that, and that'll be more apparent on the 4-hour time frame. What's interesting about that is that we're currently sitting the past 4 days on top of the 382 Fibonacci retracement level of that range at 109.72. Bottom of the green zone is that fib. So I just thought that was interesting to point out. Let's take it down to the 4-hour time frame. And as the market gets, as the chart gets refreshed here, again, you take it from that high there, and you can see I've kind of gone right here in the middle of that area. And if I zoom in one time, maybe twice, and scroll it back, you can see that it's connected into this area right here. Instead of all the way down here, I connected it here. Just kind of an average rather than going all the way to the bottom of the flash. And again, that 382 sits right there at 109.70, the bottom of our green zone. Take a look at how the market's been waffling around over the past couple of days. No real upside, no real downside. So we're waiting on the market to gain some traction. Is it going to continue the upside? Is it going to break the green zone and go up, or is it going to eventually reverse and go down? That question obviously has not been answered. I think it's very interesting. I'm going to pop back over to the daily real quick and zoom all the way in. And we looked at this yesterday. It's kind of hard to see it like this. If I pull it over here like this, what we're seeing is 2 days ago we saw a candle body get above that green zone, so it's easier to see it on the left hand side. That is the dollar yen again, but look how a couple of days ago we got above here. So again, there's really I think more of an expectation that this got above here is just kind of settled back. All we need is some positive motivation for this to go higher. Negative motivation would likely break back down under the green zone. Take a look at the US dollar index while we have it here on the right hand side. The chart on the right is the dollar index. The black circle, blue circle show resistance at the orange zone, 96.30, 96.40, and here we are again finding resistance. So again, kind of one of two things is going to happen on the dollar index, right? It's either going to finally change the status quo and break 96.40 and go higher, which it hasn't done yet, or it's going to continue what it's been doing and find resistance and turn around and go back down. Likely, whatever happens over here is going to help dictate what happens over here on the left-hand side on the US yen. So we're watching this intently. If we see a strong sell-off on the US dollar back to the pink zone 96.05, we may see a push underneath 109.70 and a pull back down to the yellow zone. But if the dollar gains some momentum, pushes through the 96.40 level and changes and gets above where these black circles found resistance, a continuation of the upside momentum for the dollar could see the break of the green zone on the US yen. So watching it somewhat intently, I'm looking for, if I want to buy this, if I'm going to go long, again, we know already what the US dollar needs to do. The US dollar needs to get above the orange shaded area if we're going to go long US yen. So that's the next thing I'm looking for. Maybe some infusion of buyers, leaving a strong bullish candle back above the green shaded area. I'm just drawing out to look more bullish there. So we look for a strong influx of buy orders and the dollar to get back above the orange zone. Otherwise, if the market is able to get back under the green zone and we see the sell-off of the US dollar again, we may be looking for the downside for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.